Bitcoin price exposure in a retirement account, I would probably rotate towards those cheaper alternatives, the Fidelity or the BlackRock, or these other low cost ETFs. If I was holding GBTC in a retirement account, I would talk to my tax advisor, because there can be, if you not always chasing low fees is the right answer, because you could get hit with an unexpected capital gain tax. Deficits keeping running. Every once in a while, they're monetized to a significant degree, and inflation is largely offset by the gains in productivity. And the downside of that scenario is that those who own financial assets keep benefiting and benefiting and benefiting, and you keep widening this existing gap we have. Basically, you continue the past 40 years.
Welcome to our channel. In today's video, we are going to delve into the insightful perspectives shared by Lyn Alden. Lyn Alden starts by emphasizing the unique advantages Bitcoin offers over ETF. While ETF provide convenient exposure to Bitcoin's price movements, they lack the versatility that Bitcoin itself offers. Bitcoin allows for self-custody, meaning individuals can hold and control their own assets without relying on third parties. This feature is crucial for those who value financial sovereignty and mobility, allowing Bitcoin to be used across borders seamlessly. However, not everyone needs or desires this level of control, making ETF a suitable alternative for those with retirement accounts or managed assets. Alden points out that the introduction of newer, lower-cost ETF, such as those offered by Fidelity and BlackRock, provides a better option compared to older products like GBTC, which has higher fees. For investors holding GBTC in retirement accounts, it might be beneficial to consult with a tax advisor before switching to avoid unexpected capital gains taxes.
Bitcoin itself gives you multiple opportunities that the ETF does not. So for example, you can self-custody it, you can bring it around the world, you can use it for its monetary purposes, but not everybody currently needs or desires that use case. So if you don't foresee that you're ever going to want that use case, the ETFs can make sense for people. They have retirement accounts, they have managed assets, they have traditional brokerages, and so to the extent that the ETFs are now an option, I view them as better as GBTC has been. So now GBTC is also an ETF. The downside is its fees are higher than some of these newer ones. And so generally, if I had, for example, Bitcoin price exposure in a retirement account, I would probably rotate towards those cheaper alternatives, the Fidelity or the BlackRock, or these other low cost ETFs. If I was holding GBTC in a retirement account, I would talk to my tax advisor, because there can be, if you not always chasing low fees is the right answer, because you could get hit with an unexpected capital gain tax. When you look at the use case for it, you have to look at the global marketplace. There's 160 different currencies out there, and many of them do not have attractive equity markets or real estate markets for people to invest in. The question of liquid savings is very hard. I have a friend who's a physician in Egypt, and he literally stacks physical dollars like under his mattress as part of his savings, because he doesn't have a local equity market that's really attractive long term. He doesn't want to hold his local currency, so it kind of comes down to, he's got a little bit of real estate, but that's illiquid, and so it comes down to dollars, gold, and assets like Bitcoin and things like that. And so Another complicating factor is that, let's say, for example, if I send money to a graphic designer in country XYZ, maybe it's Egypt, maybe it's Nigeria, maybe it's Argentina, they often will receive it in their local currency at a fake exchange rate, and then they still have the problem of, what do I keep my savings in, or how do I make sure I raise my prices each year in line with the monetary debasement that's happening. And one of the cool things about Bitcoin, or stable coins for that matter, is that I can send them the money that they prefer around their local banking system, as long as it's not a sanctioned country for me, right? So for example, I would not send money to an Iranian, even though I would have the technical capability to do so. I wouldn't take that risk as an American. But for example, as long as they're in a country where it's fine for me to send it to them, we can go around their local banking system, which is the problem. I can send them stable coins, or I can send them Bitcoin over a call like this. They could hold up a QR code and I could send it to them. They could send me a DM or an email saying, here's how to pay me. I can pay them. and then now they're getting their full rate, and they're able to save it. They're able to bring it with them should they leave their country, which as Americans, we don't really think about leaving our country. But if you're in Lebanon, or if you're in Argentina, if you're in Venezuela, like I personally know someone who moved from Venezuela to Canada, and he brought Bitcoin with him, whereas many other Venezuelans just leave penniless as they try to flee, because it's very hard to actually bring value with you outside of countries that have that problem. And so I think that the main answer I would say is think globally, and think about a kind of a board with 160 different currencies. Most of them are rapidly devaluing. Most of them have capital controls to varying strengths around them. And things like Bitcoin and stable coins give people more options to self-custody money, to receive money they want, to go around financial borders and things like that. Deficits keeping running. Every once in a while, they're monetized to a significant degree, and inflation is largely offset by the gains in productivity. And the downside of that scenario is that those who own financial assets keep benefiting and benefiting and benefiting, and you keep widening this existing gap we have. Basically, you continue the past 40 years, and you probably get more and more political polarization until you get some extreme nonlinear events. Basically, the rate of those starts to increase decade after decade, or at least the probability of those starts to increase decade after decade, until you get unforeseen circumstances. That's kind of one scenario. The other scenario is that if you do run into more acute energy shortages, we don't do sufficient energy capex, and say, for example, we have a major multi-year sustained bull market in energy prices, or AI does not live up to the productivity gains that the bulls expect, for example, and doesn't offset some of the inflation enough, then you can get more acute issues where you get things like yield curve control. You get major currency devaluation relative to commodities or relative to consumer prices, and you basically get a restructuring of the debt. I mean, there's two major ways to default on debt. One is you can default on it just outright, and the other one is you basically print the difference, where you technically give all the units back, but all those units buy a lot less than they could before. It's not the same unit that the contract holder expected when they bought that bond. And so I think one of those two outcomes, basically in either way, it's generally not great for someone who's not prepared for it. You're either not owning financial assets, kind of overall kind of ownership of things that are scarce and cash flow producing or just useful, or you own those and you get devalued. So it's a really kind of challenging binary outcome that's largely based on how powerful those deflationary forces are.
Alden outlines two primary scenarios for managing debt: outright default or inflationary tactics, where the debt is repaid with devalued currency. Both scenarios have significant implications for investors. In the first scenario, outright default can lead to economic turmoil, while the second scenario dilutes the value of the currency, affecting bondholders and savings. Investors should focus on owning scarce, cash flow producing assets to hedge against these outcomes. Bitcoin, equities, and high-quality real estate are examples of such assets. Alden advises using leverage cautiously, especially in periods of lower interest rates, to maximize benefits without overexposing oneself to risk.
Yeah, I would try to own whatever's scarce, because in either scenario, you should benefit in the long term. So things like Bitcoin, equities, cash flow producing businesses, ways to earn a good income, high quality real estate that's not in bubble valuations. For example, you buy those things, and to the extent that you use leverage, you use it cautiously, and particularly in periods of lower rates, to make sure. Again, it's unfortunately like a game of blackjack, where generally if you're not using any debt, you're kind of the people other people are dunking on, right? You're the one that's kind of not benefiting from the situation. But of course, if you overuse leverage, so one of the main questions is, to what extent could it impact inflation? Because that can impact forward expectations of Fed policy and bond rates, which can then impact equity valuations, for example. Or even things like Bitcoin valuations. But let's focus on stocks and bonds here. So to the extent that the Red Sea remains largely closed, that's an ongoing moderate-sized inflationary pressure that's, it's up against other disinflationary pressures. To the extent that things exacerbate and say the U.S. government, U.S. military gets more involved in certain regions, that can exacerbate the fiscal deficit and result in more bonds coming to market than were otherwise expected, which again can be negative for interest rates. Like it can be problematic for interest rates and therefore problematic for equity markets. It can force the Fed to monetize debts that they would have otherwise not wanted to monetize because they're trying to be hawkish. And so those are the main things. There's kind of that baseline question of what if the status quo continues, and then the longer term question of, are there nonlinear events from this? For example, if we fast forward, a year or 2 years, there's questions like, is Iranian oil still getting to the market or not, right? For one reason or another. Or is the Red Sea still open or closed? There's things that can kind of spiral negatively should certain things escalate. And so those are the main things: is does it disrupt energy? Does it disrupt shipping more than it already has? But I think the biggest outlier question is what happens, does it affect energy in any sort of really meaningful way? And then as well as things like Bitcoin that actually allow for the payment to occur with these different things. I mean, one of the cool things I did was, speaking of Bitcoin in foreign markets, I used the Africa Bitcoin Conference app. It was last year, and so I'm in this app. It's a wallet, and you could use Chat GBTC. Chat GPT with this app, payable in Bitcoin without a subscription. And so basically it democratizes access to some of these AI things that in recent years have otherwise taken subscriptions. So I think that those technologies can kind of get a leg up should we see some longer term disruption. But yeah, this year I wouldn't expect much.
Alden highlights the importance of monitoring these geopolitical developments, as they can have profound impacts on energy prices and the overall economy. For example, sanctions on countries like Iran can disrupt oil supplies, leading to higher prices and inflation. Investors need to be aware of these risks and how they might affect asset prices and financial stability. Alden discusses how technological advancements, particularly in the field of AI, can democratize access to financial tools and services. She shares an example from the Africa Bitcoin Conference, where attendees could use an app integrating AI and Bitcoin to access services without traditional subscriptions. This innovation illustrates how Bitcoin and related technologies can provide more inclusive financial solutions, especially in regions with limited access to traditional banking services. Please like and subscribe my channel.